It's Tuesday, June 22nd. This is The Street Live. I'm Katherine Ross, and I am, of course, joined by Jim Cramer. Jim, obviously, aside from the markets, we're watching Bitcoin, but what are you watching right now with the markets taking a little bit of a downturn this Tuesday morning?
Well, yeah, I mean, I was talking to my writing partner, Matt Horween. We have sold a lot. And I think that yesterday, again, it is time now to try to find stocks just because, geez, we're up to 13%. And it's not a bad time to own stocks, but we've got to find the right stocks. And when I look at the stocks that are going down, what I'm conscious of, it's kind of across the board, like it was across the board going up yesterday. But this time I think that we want to kind of get some stuff that reflects how strong the consumer is, because I think that they're not getting those stocks aren't getting the credit. The consumer strength is real, and you want to invest where the consumer is going to be.
Well, and looking at some interesting stocks, Jim, there's one that you and I have never spoken about on this show, which is Torchlight, which is touted as a potential short squeeze. I mean, this did lead the stock to jump to record highs during trading on Monday. It's falling again on Tuesday. What do you think of Torchlight aside from this short squeeze?
Well, look, the short squeeze. Which short squeeze is that? I'm sorry, because it's a little trouble hearing. Which short squeeze?
Torchlight, it was brought up yesterday by Reddit as a potential short squeeze effort. And we've talked about how GameStop and AMC are the ones that are the two successful ones.
Right. Well, look, I mean, they've got a couple that they really own. They own Clover, without a doubt. They are, I think that you can't short Clover. I mean, you take your life in your hands. But GameStop managed to raise a lot of money. And they raised a lot of money in a very good way. It's a $15 billion company. It can now reinvent itself. It has so much money. They've got some really smart people. If there was a SPAC that had that much money, I think we'd all be interested in it, especially because of the people who are running it. So they've changed the complexion. They do need to come up with something else. What they're doing is not effective. And I think they would tell you that, or else they wouldn't raise money, because they actually had a decent balance sheet ahead of raising money. What they did was raise money because they need an even better balance sheet. AMC, I still don't understand Adam's reluctance to sell more stock here. It's $27 billion, particularly because we know that Disney did not give them the first run of some really important movies, which is a shame, because it would have been great for AMC. They've been off after BlackBerry. I did a lot of work on BlackBerry last night, and they're in a number of cars, and more than 150 million cars. It's just that the problem with BlackBerry, no catalyst. They need a catalyst. So I just think that it's right for them to focus on GameStop, and it's right for them to focus on AMC. Everything else is a little too small. I applaud their efforts in those two. They never ran away from either stock. But I also feel that without knowing what GameStop wants to do, and without seeing first-run movies at AMC, I don't think that these are great stocks.
Another stock that you've done a lot of work on, Jim, is Ford, which was not only your Mad Dash this morning, but also is a very strong holding for Action Alerts Plus. I look at this stock, and I have to be honest with our viewers, Jim, I struggle a little bit to try to cover this from an angle that we haven't already covered, because we've talked about it so much. So I think that the one thing...
I think...
Yes, Jim?
The chip shortage is ending. Now, why do I say that? Well, there's a Manheim index that is what used cars are judged by. Now, if you look at it, the move was parabolic. I've actually rarely seen a chart like the Manheim index. It is just straight up. But for the last 15 days, there's been very little movement up. That's typically a sign of a top. I think the price of used cars is easing. That, by the way, was a principal part of why the CPI was up, with 1/3 of the CPI. That's a sign that there's an availability of cars coming. You get an availability of cars because Global Foundries and Taiwan Semi. Now, I know Global Foundries hasn't really found a lot of new feature-rich chips, but that's what they have to make. It's called feature-rich. It's not dumb chips. It's not chips that don't matter. It's feature-rich. But I do think that with the chips shortage easing, you're going to see a flood of new supply. And if you see new supply, you're going to see Ford stock go up nicely, because they were slated to lose about $2 billion without the chips, and that will revert to them. At GM too, I think GM is way too low given Mary Barra's efforts. So I come back to those because I think that they are the ultimate consumer purchases, and small and medium-sized business purchases, and that's who's come alive. That's who you want to invest with, and Ford and GM are quintessential places to invest.
So since they feed right into your thesis, if an investor, a newer investor, is looking to build their portfolio and they want to focus heavily on Ford or GM, since both have good stock theses at this point, Jim, how much of an allocation should they devote in their portfolio?
Well, look, I think that you can't own them both because that's not diversified. They are very different. GM has an amazing battery business that I think is not getting credit, and Ford has an electrification of the F-150, the most popular vehicle ever made. So one's an electrification story, and the other's a battery story. But one is, and they're both incredible leaders. Mary Barra is an amazing leader, and Jim Farley's an amazing leader. I've been drawn to Ford because I think that Ford, I remember when Ford was at 10 years ago when I visited the River Rouge plant, and I followed it ever since, and it's kind of, that was the absolute top. I'd love to see it take out that top. But if someone were to come to me and say, listen, Jim, I want to buy GM, I know you like Ford, there's a lot to like with GM. Now, for Ford, I'm looking at the Maverick to buy for my kid. Maverick is a really interesting small footprint truck, first of its kind, frankly, and the electrification of the F-150 is rather amazing. But I understand when I spoke to Mary Barra last week, what GM's doing is magnificent. So I think both work. I love Farley's competitive nature against Musk. He says he's going to bury Musk in the truck market, and I'm with Farley. This is the first time I've ever felt that Musk can be beaten. Farley will beat Musk. My money is on Ford, not Ferrari. Ford, not Musk.
Ford, not Ferrari is definitely sounds better. But Jim, I want to take this opportunity to talk to you about your Mad Money segment last night because it really stood out to me. You really focused on the pandemic wins that still have strength going forward. You include names such as Campbell's Soup, Take-Two, Disney, which you just sold for Action Alerts Plus. I mean, these names are long-term winners in your eyes. So if investors don't want to wait a year or two to see these names take off, what's your advice?
But I gave up. But see, I feel that it's become missionary work to stay long these stocks. Now, do I think they're value long-term? Absolutely. I think that Thor dominates in motor coaches, and I think that motor coaches are here to stay. $14 billion backlog. Brunswick dominates in boats, and people got the taste of boat, and they love boats, and boats are all backed up, hard to get. Disney did not present itself as an opening stock. They had been they've been trying to get away from ESPN by talking about Disney Plus, and I think that lost in the narrative is how great the theme parks are. But I feel like, again, people want to own Six Flags, not Disney. So these are being viewed as pandemic plays. Campbell's Soup is still, if you take the gap year out, there is growth in the amount of soup that is had, the snacks. So they're doing a good job. But I think that people are paying less for the companies that are viewed as pandemic plays and more for the companies that are viewed as the great reopening trade. And it's really that difference. And Disney has somehow gotten caught up in the pandemic, not the reopening.
Well, speaking of the reopening, of course, Jim. So speaking of the reopening, I think that one of the top stories that we hear about right now was the focus of your Real Money column this morning, which is where did the workers go? I mean, you list 5 potential reasons for why restaurants and other businesses are struggling to find employees. The most popular, obviously, is the UI benefits being so high. I'm wondering, Jim, if you think that because of the UI benefits being this high and because of the Fed, if this changes the way that we approach restaurant workers, bartenders, all of those kinds of employees.
Well, I know that people feel that the Fed has made money so easy that anybody can set up a business. I mean, there's been a 500% increase in IPOs. That means more people are being hired. Amazon hires 500,000. But the bottom line is that there's still 10 million people unemployed versus 5 million people unemployed before the pandemic. I mean, that's rather shocking. And so we've been all looking for that 5 million, and no one can find them Did they go to the country? Did they go rural? Did they go to suburbs? Or are they on their stimmies? And are they really looking for jobs in a way that is not as prudent? Or no, I shouldn't say prudent. They're just turning jobs down when they go see them. So when we see, I think Jay Powell is right to see what happens and err on the side of waiting. Because as far as I can tell, the 5 million missing workers are missing because you get $22, the equivalent of $20 if you take the benefits versus $18 if you take, this is after tax, $18 if you take the minimum wage jobs.
Jim, I want to end our show by discussing a note that both you and I read this morning, and probably both with the same kind of excitement, which is this price rate hike on Nvidia from Raymond James analyst Chris Caso, who noted that the semi company is showing signs of strength across multiple product categories. I mean, you guys own it for AAP, Jim. What did you make of this note?
The key line in that note is that Nvidia's got this Ethereum card, and it could do 400 million. But it's just icing on the cake. The piece talks about how they're selling the spares that couldn't be made into gaming chips. So I think there's a lot of people who want to pigeonhole this into Ethereum because of what happened last time. That is foolish. This is high performance computing, AI, machine learning, and gaming. And if it gets ARM, then it's just the #1 dominant chip company in the world. NVIDIA is working on remarkable things that people only think the Chinese are working on. And I think that what's happened with NVIDIA when it went down yesterday was because Ethereum went down, and that is just plain foolhardy. The second $900 price target, 27% compound annual growth rate, that's rather amazing for such a big company. I remain steadfast on NVIDIA.
And if viewers need any other reason to believe you, Jim, I mean, you named both of your dogs after it. NVIDIA 1 and NVIDIA 2.
Yeah, NVIDIA the second, we call it that. It's also known as Ragu, by the way, and he answers to both Ragu and NVIDIA the second. He answers to anything, frankly. He really answers when you have food in your hand. But I am unrepentant that I think that we often talk about it with Jeff and Zev, not to sell NVIDIA yet. It's been one of the greatest hits of all time. And we've helped, look, a lot of club members are very, very happy, and it's really sensational. A lot of club members calling in on Mad Money, which is fantastic. And the consensus is that we've made a lot of money for people, and I'm going to say that we're going to continue to do so with NVIDIA.
All right, and with that, Jim, you're now heading over to Action Alerts Plus Daily Rundown Show with Jeff Marks, Senior Portfolio Analyst. And I just saw a little notification across my screen about some moves that you guys are making, so I'm going to let Jeff take it from here. I'm excited to see what you guys are doing. You can follow them along at actionalertsplus.com.
We have raised a lot of cash, waiting for decline. I don't think the decline will be severe, but we certainly have the money to do some buying. We've been waiting to do some buying as we racked up profits, and we're getting a chance here. Thank you, Katherine.
All right. Thank you, guys. I'm Katherine Ross, and we'll see you tomorrow.